What is the best investment that one can make when inflation is happening? Well, many people think that the answer to that question is TIPS, Treasury inflation protected securities. Because while a regular treasury is a bond that pays an interest rate, and it's usually, like right now, below the rate of inflation, that means that you're getting paid a negative real return on your money. Something like a TIP, a Treasury inflation protected security, is supposed to pay you a positive real rate because it's protected from inflation. However, this year, TIPS have had some lackluster performance, to say the least, and we're going to dive into why. Ready? Let's dive in. We're taking a look at this article from Morningstar highlighting the bad performance of TIPS this year. We can see a little bit of history here. So when TIPS were started here in their first year, they received $31 billion. This was 1997. The last year alone, they issued $186 billion. And so the total outstanding balance of TIPS is $2 trillion, 5 times more than Bitcoin, twice the size of the entire cryptocurrency marketplace. So it's a big market. And as if we need another reason for the CPI to be inaccurate, which we don't because there are plenty, here is another one. When the CPI increases, so do TIPS. The Treasury raises the principal value of all TIPS by the amount of the CPI. Now, keep in mind, there are almost $2 trillion worth of these things, which means that whatever the CPI shows is going to be a direct cost to the Treasury. And so if somebody has an incentive to make sure that the CPI understates reality, here is a little bit of an incentive there because it's going to directly cost them that amount of money. Now, because of the way CPI is measured, there was virtually no inflation for decades, and so TIPS really did not do much. It was nothing useful here. An 2.09% annual rate of increase for like 25 years. So you'd expect that when record-breaking inflation hits, that TIPS would be the winner. But take a look at this chart here. We can see that while TIPS have outperformed treasuries, that's all relative, and they still have an absolute loss. The reason why comes down to this chart. When we take a look at the real yield on TIPS, we can see that for a while, they're actually negative. The reason for this can be slightly counterintuitive, but TIPS are bonds, and so they react to supply and demand just like any other bond does, just like any stock does, just like anything does. The price will move up and down along with the buyers and sellers, finding the equilibrium point at which suppliers and supply and demand is met. The reason for this can be counterintuitive, but TIPS, just like any other bonds or assets, react to supply and demand. And so when you have more buyers or more sellers, the price will move. The difference for something like a bond is that affects the yield that it's paying. If I borrow $100 from you at a 1% interest rate, I'm going to owe you $101. But if something comes up and you need the money immediately, you'll go to somebody else and say, hey, would you like to buy this debt from me? So you're going to try and sell that debt so that I don't owe you money anymore. I'm going to owe them money. But let's say they don't want to buy it from you at $100. Let's say they only have $99. Well, are you going to sell it? Yeah, you need the money. So you take a $1 loss. Now that person bought my debt for $99. How much do I owe that person? I still owe him $101. So he has a 2% yield now. The amount I'm paying doesn't change. The amount he gets on his cash does. Similarly, if you were to turn around and you were able to sell it for $102, I still pay back $101. That means whoever bought it from you at $102, they're going to take that $1 loss. So the real amount that's getting paid back on bonds, whether it's a TIP or any other bond, fluctuates with the price going up or down. And with the real yield on TIPS getting so high now, it's very possible that TIPS have become a bargain. But keep in mind, as with bonds, when you look at the interest rate that you are going to be getting, that yield, that's if you hold it to maturity, because there's always the chance, if you have to sell it ahead of time, the price of that thing may have fallen and you'll take a haircut by selling it. And if by chance inflation right now has peaked, there is a good chance that TIPS continue to get sold off, which would mean the yield goes up and the price goes down. And so if you have to liquidate before maturity, you might be taking a big hit. And as one final kicker, this may be a good time to get into something like a I bond, which which is at 9.62% right now. Maybe, depending on how inflation is measured, it's still slightly negative, but given the time frame on these, there's a good chance that you will be able to have a real yield long term on these things. But keep in mind, these are only available in pretty low amounts. And so if you are somebody looking for a very low amount to invest and you're okay with locking it up, this might be an option for you. Just Google I-bonds and go to the Treasury Direct website for more info. As always, really appreciate you guys. Thank you so much for watching. Have a great day.